Hey everybody, today we're going to be doing another dividend analysis and we're going to be looking at AT&T. If you look up dividend stocks online, most articles are going to mention AT&T, particularly for people who are solely or heavily focused on income. So let's check it out and see if it's actually a good dividend investment. First, let's take a peek at the yield. It is sitting right around 7%, which is very good overall for any company, particularly for such a large, established company. Next, let's look at the history, and as we can see, they are currently paying a 52-cent dividend per share. And going back to 2013, we can see that it has increased every year, and they have actually been increasing their dividend every year for the past 37 years, making them a dividend aristocrat. The one issue here that we can see is that all of their increases in the recent past have been 1 cent increases every year. If you're looking for real dividend growth, this is technically as low as you can get. Your dividend is growing, but by a smaller percentage every year. Alright, after that, let's go ahead and take a peek at our free cash flow. Go to our financials and our cash flow statement. And we can go down to our free cash flow line, and we can see here that over the last 5 years, we do have an increase. There's a bit of a drop from last year, but not by that much, and it has been increasing over the last 5 years, so a check mark there. Next, let's do our ratio of free cash flow, and we are looking at AT&T paid out just under $15 billion last year in dividends. We'll divide that by 0.46, and we're looking at 54%. While it's not below our ideal range, it is in our acceptable range of below 75%. So this is not a deal breaker. This is acceptable. And if we look to the year beforehand, where they had $1.5 billion more, it would have been even lower. So this is all right. We're well below our acceptable range. There's no real issue here. So where are they getting this cash flow from? Where is AT&T getting the money to pay their dividends? In short, their biggest segments are DirecTV, their networks such as CNN, where they're going to get advertising services, HBO Max, and their normal subscription services such as their phone, cable, and other services. So we're looking mostly at subscription-based services. However, they are well diversified into multiple things. So if one of them goes under, that isn't going to end all of their free cash flow. Next, let's go take a look at income. If we go over to our income statement, we will go down to net income, and we will see quite the red flag here. They lost money last year to the tune of over $5 billion, so we won't even be able to make a ratio for our income. If we look back over the last 5 years, we can see there was a huge spike in 2017, but then a steady decrease, and last year our income essentially disappeared. So why is this? It could have been related to coronavirus and people not being able to pay their bills. That's very true. But there are also some major issues with AT&T. Some of their segments, such as DirecTV and some of their networks, are hemorrhaging them money. They've recently sold off part of their stake in DirecTV to a private equity firm to the tune of, I believe, 30%. This is a step in the right direction for a segment that's losing money, but it's only 30%. One of AT&T's criticisms is that most of their acquisitions over the last few years have been terrible, such as DirecTV, HBO Max, and a few others. So much so that their previous CEO, while stepping down, was pretty much fired last year, and they have new management coming in. This new management seems to be taking some steps in the right direction, such as selling off part of DirecTV, but this is only one step and we need to see more. One of AT&T's biggest issues is their debt. And if we head over to their balance sheet, we will look and see that their total current assets number $52 billion, and their total current liabilities number $63.5 billion. So they are underwater here. Now, for telecoms, this isn't unusual. They are very often underwater on their debts. However, the problem with AT&T is many people, many analysts are expecting them not to be able to pay off these debts very well. So what does that mean? That means that when it comes to their free cash flow, their income, if they're not making money, they're not going to be able to pay off these debts. If they're not going to be able to pay off these debts, they aren't going to be able to maintain their cash flow. If they can't maintain their cash flow, they won't be able to maintain their dividend. Is this going to happen? We really have to see. They have noted that they will be using the money from the DirecTV sale or partial sale to pay down some of their debts. So again, this is a step in the right direction. It's not enough, but it's a step in the right direction. So we really want to look at the future here. We want to see particularly this income number of negative 5 billion. We really need this trend to reverse in 2021 and into 2022. But this year is very important. If this is a negative number again, this is going to be a really big red flag. If it's an even larger negative number, you could say the company is dying, but I won't go that far. We really need to see this reverse. We need to see them make a profit this year, even if it's only $1 billion, even if it's only half of that. We need to see this trend reverse, or this dividend is not going to be safe. What is likely going to happen over the next few years is that they are going to continue raising their dividend by a penny, so that they maintain their aristocrat status. Why are they going to do this? If they don't do this and they lose their dividend aristocrat status, they're going to fall out of a lot of ETFs, and they're going to see large outflows of cash, which is going to cause their stock price and their market cap to tank. Now, as a dividend investor, you don't want to see that dividend get suspended. You don't want to see it get cut. But to save the company, if this trend continues, this might be something that happens. So you really have to be careful here. You have to look at this and you have to say, this trend, I think it's going to reverse. Is that going to happen? We have to see that play out. So overall, what's our take on AT&T? Is it a good dividend investment? Is it for you? I'm really going to break from the mold here and say, no, it's not. I wouldn't even consider AT&T a dividend stock at this point. I think it is a stock that happens to pay a dividend. You're not investing in this company because of the income potential, because it's really not there. At most, best case scenario, you're getting a 1 cent increase every year. That's not very good. You can do better than that. You're investing in this company because you think that they're going to turn things around. You think this downward trend is going to be fixed by new management. You think they're going to continue selling off poor divisions, they're going to pay down their debt, they're going to be able to turn this company around, and they just happen to pay a dividend, which is a bonus. If you are an income-focused investor, I'm staying away from AT&T. I don't think it's worth the risk. If you want a dividend income from a telecom, there are safer companies out there with better financials. Verizon, for example, is going to do better for you. It has a lower yield, but it's safer. If you're looking for something that's paying 6-7% in dividends, there are dozens of other companies to look at that are much healthier than this. So bottom line, I'm staying away from AT&T until they show that they have turned this around and that dividend is going to be a lot safer. I hope this helps, and thank you for watching.